Alpha Limited is an Australian resident company. Alpha owns 40% of Delta Limited, as well as 100% of Lima Limited, both of which are Australian resident companies. Lima, in turn, owns 60% of Delta, as well as 70% of Kilo Limited, an Australian resident company. All entities have taxable income taxed at the standard corporate rate, and none are prescribed dual resident companies. Alpha and Lima are a consolidatable group for income tax purposes, with Alpha being the head company and Lima being a wholly owned subsidiary. However, Delta is also wholly beneficially owned by Alpha through both its direct shareholding and its wholly owned subsidiary Lima. As such, Alpha, Delta and Lima are a consolidatable group for income tax purposes. Kilo is outside the consolidatable group, as it is not a wholly owned subsidiary. The Australian income tax consolidations regime allows a group of eligible companies to form a single entity for income tax purposes. Some of the reasons for consolidating include ignoring all transactions between group members, pooling of tax losses and franking credits, and lodging a single income tax return. However, additional costs can also be incurred, such as from updating accounting and tax systems for complex transactions, and from inheriting various income tax obligations of subsidiaries. A consolidatable group requires a single Australian resident head company and all its eligible wholly owned Australian resident subsidiaries. An exception exists for a foreign-owned group of Australian resident subsidiaries that do not have a single Australian resident head company. In this case, the Australian subsidiaries may form a multiple entry consolidated group by nominating one of the Australian resident Tier 1 companies to be the provisional head company. The head company must meet certain eligibility criteria, such as being an Australian resident company, not being a subsidiary member of another consolidated group, and paying income tax at the relevant corporate tax rate. For a MEC Group provisional head company, no membership interest in that company can be beneficially owned by other members of the MEC Group. The subsidiary member must also meet certain eligibility criteria, such as being an Australian resident company, partnership or trust, being a wholly owned subsidiary of the head company, and paying income tax at the relevant corporate tax rate. Being wholly owned refers to an entity beneficially owning all the membership interests in its subsidiary, whether directly or indirectly through other wholly owned subsidiaries. Once entities are eligible to form a consolidatable group, the head company has a choice as to whether to consolidate. However, the choice to consolidate is irrevocable, and so the consolidated group continues until a deconsolidation event occurs. Further, once a consolidated group is formed, all currently eligible subsidiaries, as well as any eligible subsidiaries acquired in the future, are automatically included in the group. However, for a MEC group, any other eligible Tier 1 company can choose to be part of the MEC group, form their own consolidated group, or remain outside the consolidation regime. To recap, eligible entities can choose to form a consolidated group and become a single entity for income tax purposes. The group requires an Australian resident head company and at least one eligible wholly owned Australian subsidiary. Once the decision to consolidate is made, all eligible subsidiaries form part of the group, with intra-group transactions being ignored and income tax obligations being centralised.